Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. And it looks like it's another day of subdued session. And looks like Nifty is all set to extend its losing streak to about the second straight consecutive session itself. But for now, if you look at the levels front of where we stand as of now, Sensex Nifty has slipped below that 26,150 odd levels. And even Sensex, that has declined by about 81 points itself. But clearly, 26,200, that is the hurdle that the Nifty is unable to surpass. But yes, given it's the Sensex monthly expiry and also that the volumes remain thin due to muted global trading activity on account of Christmas Eve, some volatility has crept up. But yes, majority of the sectors, they have been trading with about cuts, barring your Nifty Metal Index that is up for the sixth consecutive session. If you look at the Nifty Metal Index, that is up marginally higher by about 0.1%. Apart from that, on the flip side, what did not do well in this market is clearly the IT stocks. Clearly, Nifty IT under a pressure at this point of time, 0.5% cuts coming in from there. If you look at majority of the constituents on the Nifty IT index, that has been trading with about declines. Barring your TCS, but if you can see Infosys, HCL Tech, Wipro is seeing a larger decline of about 1% itself. This came on the back of the H1B visa news that replaces the lottery system with weighted selection process, and that is what has weighed into the sentiment. But yes, let's take a quick check of how do the top Nifty gainers and losers look like at the current levels. If you look at the top gainers list, you can see Trent towering the list with about 2% gains. Apollo Hospitals doing well with about 1% gain. Shriram Finance with about 1% gains. Shriram Finance is now up for about the sixth consecutive trading session. So yes, quite a bit of a rally that is coming in for the NBFC major. Adani Ports also doing well with about 0.8% gains. Ultratech Cement doing well with about 0.8% gain as well. On the other hand, if you look at the top losers, Interglobe Aviation seeing a cut of about 1%, Wipro, Dr. Reddy's Lab, Sun Pharma, Reliance Industries, all of them seeing a decline as of now. But yes, to understand the last minutes of the trade and how you should be positioned, I'll quickly go across to my technical expert of the show. We have Ashish Baheti of Profit Mart Securities joining us. Ashish, good afternoon and a very Merry Christmas to you. But so it looks like Santa is not here on the Lal Street and it's once again a range-bound day. So what's keeping this enthusiasm subdued and what levels can we watch out from the Nifty?
Yeah, good afternoon, Ravisha. I'll say it's been a mutish day. Monday we have seen a good rally and then followed by 2 days, a little bit of a pause. Nothing much of a concern. The volumes are thin in which ways, and looks like the market is more of in a holiday mood rather than giving a big one-sided move. That's positive for the market as a whole. I'll say the entire sentiments remain buy on dips, and anyone holding long should keep a strict stop loss near 26,050. That's a strong support area, and we think that will going to be upheld for the next two trading sessions also. On the upside, yes, 26,200 becomes a resistance, but if that surpasses, we can easily see 26,400 on the chart. So once 26,200 is taken down, we may see 200 to 300 point rally easily on the Nifty. The major concern for Nifty remains the Bank Nifty and the IT, which is not contributing at all. We have seen today also many of the private banks still flattish to negative. ICICI is still trading negative. HDFC is still flat. So the concern remains the contribution is not coming from the Bank Nifty. Other than Bank Nifty, we have seen all the sector rotation happen, and even IT in the Monday's trading session was contributing to the Nifty. So overall, Bank Nifty remains a avoid trade category, but Nifty buy on dips remains strong.
Okay, buy on dip strategy, that's what we need to adopt. But it's, like you were talking about IT stocks, I mean, they are under pressure for the second consecutive day on this new H1B visa rule changes. Do you expect the underperformance to continue? Because we did see a little bit of a buying interest that came in this month, but from the past two sessions, we have seen IT stocks under pressure.
Yeah, so according to me, it's been a overreaction to the H1B norms. I mean, it's just shifting from lottery to on the based on merits, which I think will be helpful for the Indian IT as a whole and Indian engineers as a whole. So, but overall, the concern of IT earnings and overall chart remains weak for many of the large cap IT stocks. But I think mid cap IT This dip can be used as a buying opportunity. Stocks like Persistent and Coforge has remained our best pick, and they have outperformed the large cap IT. So anyone can use this opportunity or this to make a fresh new position in the mid cap IT stocks.
All right, mid-cap IT for names you're positive on. All right, let's talk about the broader end of the markets because despite mid-caps remaining subdued for another session, we are seeing small caps have defied the trend. Ashish, up to you. I mean, Nifty small cap index showing a decent amount of traction right now. Do you think there's more reversal on the cards going ahead?
Certainly, this was one sector which was humongously under pressure. We have seen both mid cap and small cap was not contributing at all, and where Nifty even made a new all-time high in the month of November series. However, the small cap and mid cap still, I mean, specifically small cap, still trading below its 200 daily exponential moving average. In fact, Monday was the trading session where it surpasses 20-day exponential moving average. So there's still pain left, but I think there's a lot of value buying can happen here in selective mid cap and small cap stocks. So one can be a little picky here and try to grab some good opportunities at reasonable valuations.
Okay, all right. The strategy is to remain selective from the broader end of the markets. But yes, one sector which has done quite well today, that is your metal index. It's up for the sixth consecutive day and it has defied the overall weak trend of the markets itself. Ashish, for you, I mean, of course, the metal basket has done quite well so far this year itself. But do you believe that this is the safe space to bet for the time being?
Certainly, the way specifically the non-ferrous metals, both industrial and precious metals, moving, this sector remains the most favored sector, and we have seen clearly outperformance in most of these metal stocks. Though they have not outperformed to the gravity or to the magnitude the metals are moving, but however, metal stocks remains our favorite even at these prices. As long as the metal rallies continues, these stocks can outperform the overall market. One should focus mainly on the non-ferrous side, so stocks like Hindustan Zinc, Nalco, and Alco. They remain the more preferred compared to Tata Steel and SAIL.
Okay, all right. That's the view coming in from the Nifty metal basket. But yes, let's take a quick check at Coal India, how the stock has been doing. Because yesterday also the stock was quite well. Today the stock has been showcasing gain of about 0.4% as of now. But yes, you know, the stock is now up for the sixth consecutive session itself. If you look at the past two trading sessions, the company did receive a bit of a traction, given that it has received approval from the board to list two of its subsidiaries, that is your Mahanadi Coalfields and Southeastern Coalfields as well. Ashish, I mean, the stock has also turned quite net positive on a year-to-date basis, and this marks the best month that the stock has seen this year. What lies next?
So today's trading session is a little bit of disturbing because we've seen a good trading session yesterday. Stock was up almost 4%, but today also it opened, gapped up, and went almost to touch 412. And from there, we've seen a bit of profit taking, and stock has slid back to or given up all its gain for the today's trading session. However, the volume has been substantially high compared to the average daily volume of the stock. So 400 remains a support area. But however, anybody who is holding long should trail the stop loss to 396. If that holds, we may see a bounce back and Coal India may again move to 410, 415 kind of a trajectory.
Okay, 410 is the next level that we can watch out for Coal India as well. All right, let's move on and talk about Chola Finance because the stock continues to rebound for the second consecutive session. Right now, the stock is trading with about % gains, given that the company has refuted the claims which were made by Cobra Post. Now, this report had alleged large-scale related party transactions, cash handling irregularities, governance lapses, and even regulatory non-compliance at the company. But the management has refuted the claims and has described them quite malicious, and as a result of which brokerages such as Jefferies and Motilal Oswal, they have retained their buy call on the counter. Ashish, what's your view for Chola Finance and what do the charts indicate? Because from the past two sessions, they are taking a rebound after the sharp 3% fall.
The price action is supreme, and the price action is speaking louder than anything else. It's clearly visible on the chart. There's that the stock has holding a good amount of strength. We've seen a good trading session yesterday. Stock was up 6%, and today again there's a follow-up buying. in this stock. So we remain positive on the stock. It's a good buy quality stock at this point of time, and momentum can be chased here. 1670 remains a strong support area. However, on the upside, 1750 is a resistance area. So anybody who's holding long can book some profit if the stock hits 1750.
All right, 1750 is the next support zone for this particular counter. But yes, let's talk about another stock in focus, that is your VIP Industries. Good volumes today that has come in on the count of block deal. We did see as many as 36 million shares, or 26% equity had changed hands through the two block deals. Right now, the buyers and sellers of the transaction is not known yet. But yes, we're seeing the stock soaring in the trade with about 10% gains. Ashish, the stock has seen a good breakout today. Do you believe the gains would sustain going ahead?
See, we've seen in this stock, specifically VIP Industries, many marquee investors checked in already last year, and even during this year, a couple of trading sessions, we've seen a big volume candles happening. But however, stock remains under pressure. Stock was trading below 200 daily exponential moving average. Today, it was probably I'll say the first day where it surpassed its 200 day. So we'll be a little wait and watch on the stock. If the stock holds 384, then there can be a buy can be triggered here. But however, I mean, for next follow through buying session is very important on this stock.
Okay, all right. That's the view for VIP Industries. Now let's take a view on Bank of Baroda, because if you look at the stock is trading with a cut of about 0.7%. It's a quiet day for the stock, but we did have an interesting report that came in by MK, where they have upgraded the counter as the management has shared an optimistic outlook on the lender's growth going ahead, and even from margins and asset quality perspective. Now, what the brokerage believes is that they have increased the counter's share target price to about 350 rupees, up from 330. Right now, the stock is trading at about 290 rupees per share. Ashish, what's your target for the counter, and how does the chart indicate the near-term trajectory looks like for Bank of Baroda?
The entire PSU banking universe is looking really good on the charts. Most of them are trading near their all-time high to 52-week high trajectory. And Bank of Baroda is comfortably trading above its all key moving averages, where we have seen many of the private sector banks are showing some weakness or some pain or some selling. But however, the PSU banks is resilient, and every dip is getting used as a buying opportunity. Our next target for Bank of Baroda is 315, and we are recommending any dip can be used here as a buying opportunity. There's a strong support area for Bank of Baroda near 282.
Okay, all right. That's the view for Bank of Baroda. Let's take another stock in focus. That is your Ajanta Pharma. The stock has been doing well today, given that it has entered into an in-licensing agreement with Biocon for the right to market semaglutide drug itself. Ashish, if you look at the stock has touched about a 5-month high. Right now, the stock is trading with about 2% gains. What can we expect the next moves to be? I mean, they're seeing a rebound from the past couple of days.
So yeah, today was a very interesting trading session. I mean, we've seen a good spike on the stock, and at least from last 7 to 8 trading sessions, stock has been inching up higher, though there was a dip in between. But however, today's volume there's a clear price and volume action today. On the upside, I think 2800 from where the reversal came today, 28, in fact 2820, that becomes a new resistance zone. So there's clearly headroom for stock to inch or move another 100 points from here. So today's dip can be used as a buying opportunity. One should keep a strong stop loss near 2690.
Okay, 2690 is where the stop loss should be. All right, let's move on and talk about another stock in focus. That's your UPL, where the stock is down today, but around 1.29 million shares off the counter have changed hands in the block deal itself. But yes, UPL, the stock is down today, but so far this year, the stock has been an outperformer. What's your view, Ashish? How does the near-term trajectory look like for this counter?
Yeah. So in today's trading session, also stock hit 52-week high, and I think almost a fresh all-time high was made yesterday. So the stocks look strong on the charts. The support area which stock has established for itself is near 765. On the upside, since it's already making a fresh new highs, there's no resistance points so far on the charts. So on the upside, based on the Fibonacci levels, we can keep a next target area of 790.
Okay, 790 could be the next target area for this particular counter. Let's take another stock in focus, that is your K Vagg. The stock is down as of now, but yes, the company did say that it has been declared the preferred bidder for a project in Saudi Arabia. Now, the scope of this work includes the design, engineering, procurement, and construction of the treatment facilities, which includes a sewage treatment water plant itself. Ashish, I mean, if you look at the stock, the trend looks quite negative. Despite today's order win. So what's your sense? Can we see a further fall in the hindsight?
So the stock has been was shown pressure, and we think that stock may slide further down. So it's a little avoid category stock for us, right?
All right, it's avoid category stock. All right, let's move on and talk about another stock in focus. Where Nuvama has initiated a buy coverage, that's your knowledge, marine and engineering. They've given out a buy call and they have given out a target price of about 2,500 rupees, which implies over 35 to 40% potential upside from the current levels. Now, what the brokerage has written and what has made them quite bullish is that they believe that the India's maritime industry is at an inflection point, and they believe that the emphasis on infrastructure creation and inland waterways is what will help the company advance ahead. They see revenue to grow at a compounded annual growth rate of about 58% over FY 25 to 28, and the brokerage also expects the company's order book to grow at 42% CAGR over the next 3 years. So yes, that's quite a bullish commentary that is coming in for Knowledge Marine, and as a result of which the stock is near its day's high of nearly 5% gains coming in for the counter. Ashish, coming to you, what do the charts indicate? The stock has traded quite well today.
Yeah, the stock is working in a niche space, I'll say, at least from the listed universe, what we have. And the chart is showing strength in today's trading session. The momentum has been good for the stock and along with the volumes. So anybody who's holding long can keep a stop loss of 1770. On the upside, we may see 1920 on the charts.
Okay, 1920 could be the next target price for Knowledge Marine. All right, with that, let's quickly move on to the next stock in focus. And of course, it's the gold financier stocks. If you look at Muthoot Finance, it's off its day's high, but Manappuram Finance has been doing quite well in today's trading session, given that we have seen gold prices globally is fueling this up move in both of these counters. If you look at Muthoot Finance, the stock is already up by about 80% so far this year, and this is one of the best calendar year that the stock has returned since its listing in 2011. Ashish, coming to you for gold finance stocks for both Muthoot and Manappuram, how does the outlook look like, given that gold and silver prices, apart from silver prices, gold prices have been hitting record highs day after day?
Yeah. So first, I would like to give a disclaimer. We have already initiated a buy recommendation for our clients on Manappuram, and that remains our top pick to chase the gold and metal surge from the NBFC space. For the Manappuram, our next possible target is 335. We have revised our stop loss to 305 now on Manappuram. For Muthoot, it's showing good amount of strength, though there was a bit of reversal in today's trading session. However, stock made fresh all-time high even in today's trading session, and stock did touch almost 3890 zone. So our target for Manappuram was 3880, but we think though the target was achieved today, but this dip can be again used as an opportunity to re-enter the stock. One can re-enter this by keeping a stop loss of 3720. For the upside, the first target is 3880, and the second probable target would be 4000.
Okay, 4,000 could be the target price next for this particular counter. But yes, gold finance stocks definitely in focus on the back of the rally in precious metals. But yes, let's move on and talk about another stock in focus. That's your Adani Ports. It has cooled off from the day's high level and has turned flat with a positive bias as of now. But we did see that the company has acquired North Queensland Export Terminal, which is of Australia. And as a result of which, we've seen PL Capital raising its target price on the counter for Adani Ports. Ashish, coming to you for this particular counter, how does the outlook look like from a near-term perspective?
So based on the technical analysis chart and the charts, the stock is consolidating in a tight range. On the upside, the resistance area, the zone has become 1520, and the downside, the channel has become 1485. The stock is consolidating in between that zone. We would be a buyer if the stock gives a breakout above 1510 and sustains those level. If 1510 gets broken out and the stock sustains, then one can go long by keeping a stop loss of 1490 on the stock.
Okay, 1490 on the stock. All right, let's move on and talk about L&T because those shares have been in focus given that the company has said that its transportation infrastructure business vertical has won a significant order from the Mumbai Metro Railway project. Ashish, if we look at the stock has been on an upward trajectory. Do you believe that this upward consolidation where the stock has been range bound, do you think that is going to continue? Because right now the stock is quite flat with a negative bias.
So yeah, we believe it's the best stock to play the India infrastructure story and along with the defense as well. The stock is consolidating a bit on the upside. We have seen a good rally in the month of October and September in the stock, and now this December was almost a consolidation for the stock. However, we believe that once this consolidation is over, the stock may resume its upward trajectory again, and stock may hit 4200 zone again. Which was almost the recent high of 4140. The stock may surpass that zone and may hit 4200. So we remain bullish on the stock. The lower support area, which stock has established for itself, is 4000.
All right, 4,000 could be the next support area for L&T, but yes, the outlook looks quite positive. All right, with that, let's move on to NTPC because the company has announced its plan to set up a green hydrogen project at Greater Noida in Uttar Pradesh itself. The stock, however, is quite flat as of now, but Ashish, what lies next in terms of charts for NTPC?
So we've seen a good amount of buying in most of these power and power generation stocks and from last couple of days. However, today's reversal is a little bit of concern. The stock tried to break above 320 and 325 zone. But however, it looks like the attempt has failed and stock is sliding back to its 20 daily exponential moving average. So I think anybody's who hold it long for a short-term perspective or anybody's in a swing trade can exit or book some profit here. If 20 DEMA is broken, then we may again see stock sliding back to 310 odd levels.
All right, 310 could be the next support areas and of course the next zone that we need to watch out for. But yes, so with that, let's quickly move on to our next stock of today. That's your Castrol India because that stock has cooled off from the day's high and it is down by about 5% from the day's high levels. Given that British Petroleum has agreed to sell about 65% shareholding in Castrol to Stone Peak at an enterprise value of about $10 billion. Ashish, coming to you, I mean, despite the stock's outperformance today, it has been an underperformer so far this year. And if you look at the counter itself today, it's trading right now sub 200 rupees. What do you expect the trend to be in the near term?
So the stock has made, if I exclude today's trading session, the stock has clearly made a rounding bottom kind of a pattern in today's trading. If I just remove the spike which it showed and there was a high which it made above 200, if I just even exclude that zone and just consider the entire trading body of the stock or the candle, stock is showing strength and we may see stock inching back to 200 or 195 to 200 zone in a couple of trading sessions. So the stocks look bullish on the charts. The support area for the stock has been established at 185.
Okay, all right. 185 could be the next area that we can watch out for Castrol India. But yes, let's take a quick check of how the last rates have panned out because it looks like the Nifty has continued to slip for the second consecutive day. If you look at the Nifty levels, it's down and below that 150 odd levels. 40 points downtick that has come in for the benchmark index. If you look at Sensex, also down by about 100 points. 0.1% decline coming in for the Sensex, given it's also the monthly expiry, as a result of which we can see the Sensex also down by about 100 points itself. But yes, broader end of the markets, if you look at the Nifty Midcap index, down by about nearly 400 points. Small cap index, however, outperforming out of the two and it has exhibited gains of about 0.2% as of now. But yes, from a sectoral pocket and point of view, you can see Nifty Metal Index has done quite well. Sixth day of consecutive gains and settling flat but with a positive bias. Nifty Media Index has also done well, 0.5% gains, and Nifty Realty Index has also bucked the trend, settling marginally in the green. However, what has not done well, that is your Nifty IT Index, 0.5% cut coming in. On the other hand, if you look at the Bank Nifty Index, that has also settled in the green. 100 points downtick that has come in for the Bank Nifty. On the other hand, if you look at Nifty FMCG, also closing in the green with about 0.5% decline. But yes, let's take a quick check of how does the top gainers and losers look like on the large caps. That's your Nifty 50 front. If you look at Trent, that is clearly one of the top outperformers. 2% gains coming in for the counter. Shriram Finance up for the 6th consecutive day. Apollo Hospitals definitely doing well on the back of the NSC approving the demerger of its healthcare entities, and that is why you can see 1% gains coming in for Apollo Hospitals as well. Bajaj Auto, Ultratech Cement, Maruti Suzuki, some of the other gainers on the Nifty 50. But yes, let's take a good check of the flip side picture of the Nifty 50. What contributed to the loss of the benchmark index? Interglobe Aviation seeing a cut of about 1.5%. Dr. Reddy's seeing a decline of about 17 points. 1% decline coming in for Dr. Reddy's as well. Wipro, one of the IT stock, not doing well with about 1% cut. If you look at some of the other losers, HDFC Life, Tata Motors Passenger Vehicle and Sun Pharma, clearly one of the top underperformers of today's trading session. But yes, let's talk about Apollo Hospitals more because NSC has approved its demerger of the digital health business as well and the omni-channel business that the board has had approved in July itself. And right now the stock has been trading a little bit resilient. The stock has settled in the green with about 1% gains. But yes, coming to you, Ashish, Apollo Hospitals, what can we say? I mean, for the near term, does the outlook look promising?
Yeah. So if you'll see a weekly chart of Apollo Hospital from 9 consecutive weeks, we are seeing continuously red candles and stock is slide from almost 8,000 to back to 7,000 odd levels. So stock touched 7,000, even slipped below 7,000 last week. However, there's a bit of reversal in this week trading session. And today was the first day where stock has moved above its 20-day exponential moving average from after at least 20 or 30, 20, 25 trading sessions. Stock has been able to regain its 20-day exponential moving average. So today's low becomes a crucial point for the stock. If this holds or if there's a follow-through buying, we may see a rebound and stock may move back to 7,400 kind of level. So one can go long here for on the next trading session by keeping a stop loss near today's low, that is 7070.
Okay, all right, 7070 can be watched for Apollo Hospitals. All right, just one last question before we let you go, Ashish. What are your top picks and anything that you're finding interesting in the markets as of now?
So we are bullish on the NBFC space along with the metal and mining stocks. So from the mining stocks, NMDC looks good on the chart. The stock has clearly given a breakout in yesterday trading session. There was a pause day today. So we think stock has the potential to touch 86 level. So we are recommending it as a buy by keeping a stop loss of 80.
Okay, all right. NMDC is something that you're bullish on. All right, we'll keep a watch on that. On that note, we have to let you go, Ashish. Thank you so much for your time and joining us.
Thank you. Sure.
All right, that was Ashish for you. And of course, it's been another range-bound day for the markets. And while we expected the day to be Christmassy, it hasn't delivered so, because if you look at the Nifty that is deep into the red, it slipped below that 26,200 levels and even 26,150 as of now. But yes, global markets remain shut and thin volumes have been seen today. Tomorrow also we will be having our holiday, that's on account of Christmas holiday. But yes, overall, the markets remain quite subdued as of now because both the headline index has extended losses to the second consecutive day. But yes, a clear outperformance was seen by the Nifty Metal Index, one of the top sectoral movers. And what did not do well was the IT stocks coming under pressure due to the changes in H-1B visa rules. But yes, apart from the markets, we did see an interesting brokerage note that came in by Motilal Oswal today, where they have highlighted that the India Inc. has logged its first aggregate earnings upgrade in the last 5 quarters. And that signals a turn in the corporate profit cycle after a prolonged period of estimate cuts. Now, what the upgrade is seen by the Motilal Oswal is being largely driven by the mid and large cap companies, even as small caps continue to see downgrades. Now, their universe of stocks has seen that the FY26 PAT estimates that has risen by about 2% over the 3 months that is in your second quarter earnings season, and that marks the first upgrade since the June quarter results. Now, this follows a string of cuts over the preceding 4 earnings periods and underscores a clear inflection point in the revision cycle. But yes, whether or not we can see earnings upgrades continue when the trade deal still remains on the sidelines is something we'll understand from our next guest of the show. Let's quickly get on board with Kunal Walia, who is the founder of StatLane. Kunal, good afternoon and a very Merry Christmas to you. But, it's been a fairly range-bound market this year in terms of levels. If you see, Nifty has been where it was last year in September. What for you can trigger the benchmark to move past this and make new highs?
Hi, good afternoon. Thank you for having me on the show. So coming to markets, I wish we had better valuations prevailing at this point in time for us to have a next leg up. But unfortunately, there are different landscapes which are prevailing in the market, and we see continuation of a range-bound market, particularly in large caps for the first half of 2026 as well. But let me start with how we see the markets and what are the reasons and the tailwinds and headwinds for Indian equities. So there are several structural and cyclical positive for Indian equities right now. But I guess in 2026, especially the first half, the risk landscape will be evolved by global developments rather than things associated with India in particular, but it will be largely driven by what is happening globally. As a result of which, for domestic equities, we see a very range-bound move for large caps and a little bit of time and price correction for mid and small caps in the first half at least. So that's the point to start with.
Okay, all right. But Kunal, there was the latest report by NSE that showed that how direct equity investing euphoria has ebbed this year. If you look at the report, individual investors, they have pulled out about 8,000 crore rupees so far this year. So from record purchases last year, now the enthusiasm has cooled off. Do you think that confidence can be restored? Because if you look at the small cap index, that still remains under pressure.
Yes. The confidence has taken a little bit of a downfall because of purely a range-bound move in Nifty over the last 15 odd months and a reasonable price correction in some of the small cap and micro cap counters. But we also have to take into consideration the amount of money which has been going into IPOs. So that frenzy continues to be there, and I think that's one of the areas where we need to be a little bit concerned about, given the liquidity flows in some of the highly valued IPOs or IPOs where the profitability parameter is not seen. So there is a little bit of enthusiasm which has died down in secondary market, but the primary market continues to see a lot of frenzy right now.
Okay. Kunal, do you believe this frenzy is going to continue for next year as well? Because you did mention, that this year we have seen a record fundraise in terms of the primary markets.
Right. So let's look at what are the positive tailwinds for domestic equities and what would be the headwinds for us going ahead over the next 6 to 12 months. So on the positive side, we have a Goldilocks situation where Indian economy continues to be among the fastest growing economies. And at the same time, we have an inflation which is well below RBI's targeted inflation rate of 4%. The latest inflation for last few months has been below 1%. So it's a very ideal scenario for an economy like India where we are growing faster and the inflation is way below our targeted rate by RBI. Secondly, the fiscal support in the system, we will have budget as we start the next year somewhere in February. So there will be a lot of good news relating to capex, railways, defense, and so on and so forth. So that is another positive which investors can look forward to. Coming to monetary support system, RBI, as we have seen, has been very, very accommodative given the inflation, the way it has been in 2025, to everyone's surprise, very, very low. So RBI has been supporting the economy by bringing down the rates aggressively as well as bringing as much liquidity into the banking system to bring down the transmission of rates pretty quickly. We have now seen yesterday RBI announcing open market operations wherein they are going to buy government securities from the bond market in order to control the sudden rise in yields which we have seen in last 2.5 to 3 weeks. Uh, we already have the income tax cut which came last budget, which led to 1 lakh crore of more disposable income in the hands of investors. We have seen government taking a very good move on GST rationalization, adding more disposable income in the hands of investors. And possibly in next 3 months or next 6 months, I don't know when. It's been long awaited, a trade deal with US going through. And we have already seen an underperformance relating to developed markets in last 15 odd months vis-a-vis US, vis-a-vis Europe, Japan, as well as emerging markets. We have been large underperformer. And that has been largely on account of elevated equity valuations and FII selling. So I think large part of the bad news is already priced into the market. Now, what we need is a good earnings growth. The PAT growth needs to move up. I think we have reached the bottom in terms of the earnings cycle in the latest September results. And over next 12 months, we are going to see a reasonable upmove in the market. So that's on the positive tailwinds. What are the possible headwinds which investors need to understand as we proceed into 2026? I think, as I mentioned earlier to start with, the risk landscape will be evolved by external developments rather than India specific risk. Where we see the risk globally, I think there will be a reasonable GDP slowdown in the developed nations. There could be a re-acceleration of inflation. And what it means is that the number of rate cuts which the economists are talking about by the Federal Reserve, European Central Bank, Bank of England, possibly we may not get as many rate cuts as which are being priced into the markets right now. Another risk to the global equity, which I think is very important for us to understand, is the AI related news. In case all the hype about the AI, if it does not come through in terms of the profits over next 12 months, next 24 months, then there could be derating of those growth stocks. Further, we are seeing something which we have not seen in the last 2 decades, which is Japan raising rates. They have recently raised the rates last week. Although we understand that there is going to be an orderly movement of rate hikes by Japan to bring the real rates a little bit more positive than what they are today. Uh, an unorderly movement by Japan can lead to a lot of unwinding of carry trades, which I think could be a very, very big move in the global markets, which could disrupt and create tensions in emerging markets as well. And on top of everything, the global equities as a whole looks reasonably overvalued. You go to US valuations are now at peak. We are seeing a new high almost every day. So these are some of the headwinds which we see will play a very dominating factor and override some of the positives which Indian economy is throwing about, at least in the first half of 2026.
Okay, okay. So, Kunal, does this mean that the flows for India could turn favorable going ahead? Because on one hand, we have the US economic data which shows that the Q3 GDP print has beaten the estimates. So, I mean, would that make FIs a little hesitant to come back to emerging markets and, for instance, back to India itself?
In two scenarios, we see FI coming back to Indian markets. As you know, FIs have been selling largely for last 2.5 to 3 years, and their ownership of NSE 500 companies has come down to historic lows, almost 15%, 15.5%. So I think that is a bad news which is reasonably priced in. Uh, we see two reasons why they could possibly come in to India aggressively. One, the earnings seasons, which will start from April, and any improvement in earnings compared to last 4 or 5 quarters will see them coming back into Indian equities in a big way. The second situation in which global FIIs will come back to India is that there is a lot of disruption in US equity market. There could be some kind of a price correction which is very abrupt in US equities because there is too much of good news relating to AI is getting priced into US equities. So if the US market underperforms, there is a fair chance that the FIIs are going to come to India in a reasonable way. Besides that, we don't see any other situation. If the US continues to do well, Europe and Japan continues to do well, then there is I would say, a lesser probability of them coming back in a rush.
Okay, got it. But Kunal, I mean, the trade deal overhang continues for us, and as a result of which we have seen the currency weakness as well. But I mean, despite the RBI's intervention today, we have seen once again Indian rupee has closed lower against the US dollar. So, what do you think the currency movement is going to be like, and is it going to be a key overhang in terms of the FI sentiment?
In the near term, yes, it's a key overhang, and rightly so, because we need to understand that if the exports are going to suffer for next 6 months, if the trade deal does not go through, then we need to understand the trade deficit data. We are large importers compared to exporters. And in such a situation where our imports continue to rise or stay flat and if the exports have to decline, it immediately puts pressure on the current account deficit. And in such a situation, typically we see the currency getting depreciated. But we are hopeful that the oil prices remains lower despite the gold prices being so high. And we need to remember that we import both gold and oil. It is the oil which is giving us the comfort that this is something which is a near-term issue and not a longer-term issue. However, if gold price is correct and oil prices remain where they are, then it is going to be turned favorable from a currency standpoint and thereby from an overall macro variable for India.
Okay, got it. But if you look at the precious metals, both gold and silver continue to remain at record highs. Just when we were anticipating that they would consolidate at those higher levels, but still, once again, they are at fresh record highs each single day. How do you believe 2026 is going to pan out? Do you expect a certain consolidation, or can they notch further highs going ahead?
This is largely on account of the de-dollarization trade and the buying by the central bank, especially China. They have been buying aggressively gold, and we see a large part of shift in investor sentiment towards gold and silver. Typically, it's always been a case of some allocation to gold and precious metal have always been there, but now gold and silver are reaching a stage where the proportion of investment into gold and silver will be higher than ever before, especially relating to the issue of the global debt. We are now reached a situation where the global government debt is now $100 trillion, which used to be around $20 trillion 20 years back. And as a percentage of GDP, which is even a more important number, from 60% of GDP in 2000, it has now gone to 100% of GDP for the overall world. So the global debt fears are playing a very important role today. And as a result of which, many investors across the world, central banks across the world, believe that precious metal will have a larger allocation to any investment strategy compared to just equities and bonds and alternates. So I think this is something which is going to continue for a reasonable period of time. Not I'm saying that at this prices one can blindly buy any precious metal. I think there has to be a disciplined way of buying both the metals, but definitely the proportion of allocation is going to go up towards precious metal given the de-dollarization trade, the global debt, and so on and so forth.
Okay, got it. Kunal, let's talk about IT stocks because they have been under pressure for the second consecutive day on the modified H1B visa rule changes that we have seen. I mean, just when we had a quarter where the sector had fared better than expectations, what do you think the new changes mean for the entire sector then?
Right. IT is one of the contra bets which we are very positive about. We continue to be very positive about for last 6 months on IT. We understand all the negatives are getting priced in, as a result of which over the last 3 years, IT has not done anything much. And even in next 1 or 2 quarters, we will face this heat. But I think IT as a sector from next 2 years perspective look reasonably positioned right now. The profitability of the companies continue to be reasonably well placed, and the valuations have adjusted for the growth rate which is expected. So over next 12-24 months, IT as a sector is a reasonable good bet for investors to look at.
Okay, IT. Apart from IT, anything else? I mean, if you had to list out your top 3 sectoral bets for 2026, what would that be?
We are positive on metals. We are positive on IT. IT is a contra bet. Metals is something which is already in a momentum path. Metals and auto. Financials will see a reasonable rebound given that the net interest margins are going to be better compared to 2025. So that being a very large part of the index, we are reasonably overweight on financials as a sector. And one sector where we are another contra bet which we are placing on is on PSUs. Ex-PSU banks. There are a lot of PSUs in the mining space and the fertilizer space, defense, railways, and so on and so forth. They have not done well over last 18 months. So PSU is one area where we are very bullish about for next 12-24 months.
Okay, got it. All right. On that note, we have to let you go, Kunal, but thank you so much for your time and joining us.
Thank you.
All right, that's all we have for this edition of Closing Bell. But yes, given that the global markets will be remaining shut, and for our own markets, which will also remain shut on account of the Christmas holiday tomorrow, we'll catch you on Friday and we'll watch whether or not Nifty recovers from its two-day losing streak itself. But for now, it's a wrap from me, and thank you for watching. Do have a good and wishing you all a very Merry Christmas.